Imagine a bustling city square suddenly falling quiet. The energy fades, conversations stop, and the once vibrant atmosphere is replaced by an eerie calm. This is the kind of dramatic shift that can send shockwaves through any community. That's exactly what happened to the Shiba Inu. Market, recently, a sudden and unexpected silence after a period of intense activity and excitement. After a period of explosive growth that drew in new investors and headlines, Shiba's price crashed by over 44%. This sharp drop left many holders stunned, asking themselves, what triggered this dramatic reversal, and what could it mean for the future of Shib? This kind of sudden correction is a classic reminder of just how volatile and unpredictable the crypto markets can be, even for the most popular tokens. At Crypto Insider, we believe there's always more to the story than just price charts. That's why we dig deeper, analyzing on-chain data to uncover the real forces at play behind the scenes. In this video, we'll break down 3 key on-chain warning signals that foreshadowed Shib's plunge, signals that many traders missed until it was too late. Declining network activity, a mass exit of short-term holders, as many rush to sell and lock in profits or cut losses, and a lack of institutional support, with big players stepping back from the market at a crucial moment. Our goal isn't to predict the future, or hype up the next big thing, but to empower you with knowledge and insight so you can make smarter decisions in a fast-moving market. By understanding these market mechanics and the data behind them, you'll gain a clearer, more objective perspective, one that's driven by facts, not just hype or fear. Let's start with the most fundamental indicator of a network's health: user activity. When users stop transacting, it's often the first sign of trouble ahead. This metric is our first major clue in decoding Shib's correction, and it's where our investigation begins. Think of a crypto network as a digital city. Active addresses are its citizens. Each address represents a unique participant, contributing to the vibrancy and health of the ecosystem. Just like a city's population, the more active addresses there are, the more dynamic and resilient the network becomes. When active addresses rise, the city thrives. When they fall, the streets empty out. The energy fades, and the sense of community weakens, making the network less attractive to newcomers and existing users alike. Recently, Shib's daily active addresses dropped sharply, signaling waning interest and engagement. This decline is more than just a number. It's a reflection of real people stepping away from the network. This isn't just about buyers and sellers, it's about fewer people using Shib for any purpose, whether it's trading, transferring, or simply holding tokens in their wallets. A shrinking user base weakens the network effect, undermining the token's value. The fewer the participants, the less incentive there is for others to join or stay. For investors, this is a red flag. Price rallies mean little if user engagement is falling. Without a strong foundation of active users, any price surge is built on shaky ground. Fewer participants also mean thinner liquidity and more volatility. With less trading activity, prices can swing wildly, making the market riskier for everyone involved. This pattern isn't unique to Shib. Declining on-chain activity has preceded major corrections across crypto history. It's a warning sign that seasoned investors watch closely. When people stop using a token, its utility and value erode. The network loses its purpose, and confidence in the project fades. Shib's recent quiet city was a clear warning that the rally's foundation was crumbling. The silence spoke volumes about the underlying weakness. The stage was set for a major price drop, as the lack of activity left the token vulnerable to a sharp correction. In our city, short-term holders are like tourists. They come for the excitement, eager to experience the thrill of a new trend or a sudden price surge. They're drawn in by the buzz, hoping to catch a quick win before moving on to the next big thing. But just as quickly as they arrive, they leave at the first sign of trouble, not wanting to risk getting caught in a downturn. On-chain data revealed a mass exodus of Shib holders who'd only held for 1 to 3 months, showing how sensitive these investors are to shifts in sentiment. As price momentum faded and uncertainty crept in, these tourists sold rapidly, flooding the market with supply and amplifying the volatility. This sudden selling pressure overwhelmed demand, accelerating the price drop and leaving longer-term holders to weather the storm. Rallies built on short-term speculation are fragile. When speculators leave, the structure collapses, exposing the market's underlying weakness. This isn't new. During past crypto bubbles, short-term holders rushed for the exits, causing catastrophic crashes and leaving lasting scars on the market. For new investors, it's a warning. Know who's holding your token, and understand the risks of relying on fickle momentum. Until these sellers are flushed out and the market finds its footing, it's hard for prices to stabilize or for confidence to return. The exit of Shiba's short-term holders was a clear sign the party was over, and the easy gains had vanished. Sustainable growth depends on long-term believers, not just momentum chasers looking for a quick profit. The lesson is clear. Beware of hype-driven surges without solid foundations, as they rarely last. Only when the tourists leave can a true base form, allowing for healthier, more sustainable growth in the future. Shib's correction followed this classic pattern, reminding us that real value is built on patience and conviction, not fleeting excitement. In our analogy, smart money is like major corporations investing in the city. They bring stability and credibility. In Shib's rally, institutional investors and crypto whales were notably absent. On-chain data showed that while retail buyers piled in, large wallets were selling or staying on the sidelines. Without smart money, there was no strong support when sentiment shifted. Institutional capital provides liquidity and confidence. Its absence is a red flag. Unlike Bitcoin or Ethereum, where smart money accumulates during dips, Shiba's rally was fueled almost entirely by retail hype. When retail sentiment soured, there were no big buyers to catch the fall. The result, a vacuum that allowed Shiba's price to plunge until new buyers saw value. Shib's 44% plunge echoes countless crypto cycles, euphoria, speculation, and sharp corrections. In 2017-2018, altcoins soared on hype, but on-chain data showed stagnating user growth and minimal institutional support. When sentiment turned, these tokens crashed by up to 95%. Dogecoin, SHIB's predecessor, followed the same script retail-driven booms, declining activity, and rapid exits by speculators. Each time, prices consolidated for months before finding a new base. The lesson: markets driven by hype, not fundamentals, are fragile. Declining engagement, speculative exits, and lack of smart money create the perfect storm for corrections. This isn't a verdict on a project's future, but a reality of market mechanics. After hype fades, only real utility and committed communities drive sustainable growth. For the Shib Army, this correction offers vital lessons. First, trust data over hype. On-chain signals like active addresses and holder behavior reveal the market's true health. Second, long-term value comes from committed holders and real utility, not just price action. Focus on building projects like Shibarium and ecosystem apps to attract genuine users. Third, patience is key. Crypto volatility is normal, and panic selling locks in losses. Strong communities and ongoing development can recover from deep drawdowns. Use this consolidation to regroup, build, and transition from speculators to true believers. Finally, practice risk management. Only invest what you can afford to lose and diversify. The 44% drop is a reminder. High rewards come with high risks. Foster responsible discussion and encourage research. A healthy community balances optimism with realism. As Shib's dust settles, the path forward is about reflection, patience, and fundamentals. The data tells the story. Retail hype faded, speculators left, and institutions stayed away. Now, the focus must shift to building real-world utility and supporting ecosystem growth. The core community remains. This is their chance to shape Shib's future. Projects like Shibarium can prove Shib's evolution from meme to meaningful ecosystem. Investors should stay informed, use on-chain tools, and make data-driven decisions. The recent plunge was a stress test. The answers were in the data all along. By embracing patience, focusing on utility, and learning from the past, Shiba can build a stronger, more sustainable future.